Hi guys, welcome to my YouTube channel. Today I'm going to talk about stocks versus real estate. Super boring. I know there's many people that have spoken on this. I'm not an expert by any stretch of the imagination. However, I like to share my 2 cents. Right? Oh, as you can see, I bought a mic. It's plugged in. Like I said, I promised I was going to have it set up for this. Hopefully, the sound quality is actually better than the last two videos. But let's get right to it, right? Stocks versus real estate. It's been sort of I wouldn't say an opinion-based discussion in social media platforms or content that many people have put out. So essentially, let's start with stocks. Stocks, high risk, high reward. That's number one. Number two, um, I'm not discouraging anybody from investing in stocks. They're high risk, high reward. I mean, these are just the facts, right? Um, they have a low barrier of entry. What does that mean? You can enter literally in your underwear. You can be at home, open up a brokerage account through Fidelity, Vanguard, um, M1, Charles Schwab. It doesn't matter, right? You can invest, I think, as little as $100 to start in some cases. Um, and it's very quickly the transactions, right? You put in that call, you do your research. I would certainly recommend you to do some research on which companies and stocks you want to invest in, right? And then the market as a whole has several asset classes that you want to look into, right? Do I want to invest in stocks? Do I want to invest in index funds? Do I want to invest in treasury bonds? Um, Although treasury bonds are boring and they're low risk and low reward. So not the stock market in general is all equal, right? Stocks are high risk, high reward. Index funds tends to be more stable because index funds look at a group of stocks in different industries. You're investing in all these different companies via that one index fund, and it can be the S&P 500 NIX, just to give you an example, right? And the NIX, in that S&P 500 NIX is going to invest in every player with each of the strengths that they have in that Nick team, right? Just to give you an example. Maybe that's a bad comparison or a bad or very poor analogy, but just so you have an idea. And so you put in $100, those $100 gets distributed into these five players, and you get return on their productivity through those $100. So maybe 101, 102, 103, 104, it may be 110. Gradually and historically, you could do your own homework. The S&P 500 has had a return of, on the conservative side, 8%, and on the more non-conservative side, over 10%, 11, even 12% in some cases, right? So the question you got to ask yourself is, if the S&P 500 has had a return of 10%, let's say on average 10%, you know what? Let's go on the more conservative side. Let's hit 8% average on an index fund, not as which is a series of stocks in the last, let's say, 100 years. Let's say 90 years. Let's say 50 years, which is a more. You can go back 50 years. S&P 500. Let's say 8%. Now, do you rather have your money sitting in a bank at, I don't know, a fraction of a percentage in a savings account, a fraction of a percentage on an index account, I'm sorry, on a CD account, or would you rather have that money returning over time at 10%, at 8% in an index fund in the S&P 500, right? So these are the questions. Again, I'm not recommending, I'm not a financial advisor by any stretch of the imagination, that you have to ask yourself, what are you comfortable with? Right? Some people are comfortable having their money underneath the mattress. I'm okay with that, right? But these are questions you got to ask yourself. Again, the barrier of entry for the market is a lot lower. Capital gains, depending upon what you're invested on, you have to pay some taxes on it. It's a lot easier to diversify, right? Because dividend income. Say you invest in a company, right? That company pays out dividends, right? You could invest in company A that pays out dividends. You can invest in company B that pays out dividends. You can invest in company C that pays out dividends. So it's easier to diversify to pay out dividends, right? is relatively liquid, right? Stocks are very liquid. What does that mean exactly? Liquid means you can sell and buy stocks on a whim, right? You can put in a call to sell at a certain price that you own. I'll walk you through an example. You buy shares of Twitter at $17 a share. So you say, okay, 17, I'm gonna buy $500 worth of Twitter shares, right? You sit on those shares. You haven't invested, you haven't continued to invest, but you have an emergency. You have to put in $2,000 or whatever. You want to put that money somewhere else. You can easily go to Vanguard and sell those shares on a whim, and the money is deposited into your bank account. That's what I mean by liquid. So stocks are it's a good way to enter investing. Again, real estate is a tangible asset. You can touch it, feel it, smell it, right? You have to have, in my opinion, the physical and mental stamina to build out a portfolio in real estate, right? Because there's so many moving parts, right? There's so many people in the process of acquiring an asset like real estate and getting rid of an asset like real estate. So real estate is illiquid. It's not liquid, it's illiquid. What does that mean? You cannot just sell a piece of real estate on a whim, just like you can do with stock, right? Many people are involved. Attorneys, depending on the state that you live in, title companies, many different forms, underwriters, bankers, the bank. So there's so many different hands to get rid of it, right? That's one of the disadvantages of it. But I think that let me go back to why the barrier is a lot higher, because to invest in real estate, you need at least 20% down if you really want to go as an investor in real estate, right? Not the other BS that they're trying to sell you, house hack or, live in one property, rent out the other. Although I tell you, I recommend that process if you're trying to get in it. 100% recommend the process. I'm specifically just speaking about, and I'm not knocking that process, by the way. I think it's an excellent process. Had I known that process 10, 11 years ago, no question I would have done it, right? But people, it's all on preference, right? I cannot force that into you. You may not want a neighbor. You may not want to be a landlord, right? It's a different set of rules, right? You can get 3.5% down, live in one unit, or I think 5% at this point. 5% down, live in one unit, rent out the other. You can live for significantly, your living expenses can be significantly down to zero if you play your cards right, or it can be very minimal, right? Considering how the increase in rent, and by the way, they're going to keep increasing just because of inflation, right? Inflation is the cost of goods and services going up, and that's living expenses actually going up. But going back to real estate, right? So one is illiquid, right? So you can't get rid of it on a whim. Number two, the barrier of entry is you need a lot more money. No one has 20 grand and a $100,000 investment just sitting around. Plus you may have to fix the investment. Plus you have to pay attorneys to close, right? The process is a lot longer, 30 days to 6 months to close on a real estate deal, right? And then you have it, and then you have to now get tenants in it. So now your asset is at the hands of someone else. Not everyone's built for that. Not everyone, I'll give you an example. I know my dad, he doesn't like people touching his stuff, right? So I cannot imagine him getting into real estate and having tenants touching a property that he worked for to acquire, right? And so it depends on who you are, be self-aware. So those are the differences between investing in real estate and stocks. The major differences, I think, that people don't tend to talk about all the time. You're going to lose in both asset classes. High level, you're going to lose, right? They're both some sort of risk. It becomes less risky once you do your homework, right? But real estate it's in my opinion, it's more of a stamina sport. It's not stocks. It's not the market. The market you cannot it's not like you time the market. The market is very if you play it correctly, it can technically really be passive income. real estate, I don't care what anyone tells you, is not passive income. As a flipper, as a buy and hold investor, as a wholesaler, it's not passive income. But let's go back holistically to residential real estate, right? So higher barrier of entry, more money to get in because you need more money to get into it. It's a tangible asset. It's illiquid. It offers one of the pluses. Quite honestly, it's one of the asset classes that offers a lot of very good tax breaks, right? And I'm not gonna get into this whole tax lecture here. I'm not a CPA, nor am I a tax attorney, but I've read enough to be dangerous, right? Where you can exchange a property of equal value without paying capital gain taxes, right? So what do I mean by that, right? Let me explain. So I bought this asset in 2000 at $100. Now it's worth $500, right? So now you have $400 of equity that you gain, of capital gains that you gain on this property. I want to sell this property. It's not my primary residence. I just want to sell the property. Chances are you're going to have to pay on that $400,000. You're going to have to pay taxes on it. With real estate, there is a loophole. I wouldn't say a loophole. I want to say you can defer the taxes on that capital gains, right? So you can use that equity of $400,000 and buy another property of equal value, right? Say this is a single family. Now you want to buy an 8-unit. You want to put the down payment of $400,000 for a 4-unit property. You sell this one. You get your equity and you put it on this asset, and you don't have to pay capital gains taxes on that gain as long as you use it for that purpose. Now, that's high level. I would encourage you to read more about it because there are timelines, there are intricacies in that process alone that require you to be very meticulous when you do that. And so I encourage you to do your due diligence. But the book has a lot of good information. I encourage you guys to read it. I'm not getting paid by giving that information out. But those are some of the advantages of real estate, right? It's not for everyone. I'm not saying don't get in it. You can certainly partner with someone you may partner with a person that may supplement your weaknesses, right? So say you're not a people person. Say you want to be a silent partner in an investment deal because you don't like dealing with tenants, you don't like getting calls at the middle of the night or whatever the case may be. You can say, all right, I'm going to invest in real estate, but I don't want to deal with that. So I'm going to partner with this person and do a 50-50 deal or however you want to structure the deal and say, look, I'll be the silent guy. You're more of a handy guy. You are a contractor. You do maintenance and do all that work. Let's do a 50-50 deal on this unit, or a 60-40 or 70-30 deal. You deal with the tenant. I won't deal with the tenant. We'll split the cost 60-40 or 50-50 or whatever the case may be. Just know thyself, because again, it's not for everybody. You may have people that you may be a person that's combative, but you don't know it, right? And so you can't be combative with a tenant, right? Over $1 or over $100, right? You have to be able to pick your battles. And so is a contact sport, is a people sport, is a relationship sport, is a network sport, where stocks, it's not necessarily that way. Stocks, you can trade. If you're an institutional trader, you can trade from your underwear. If you're a retail investor in the stock market, you could invest in your underwear. If you're options buyer, you could literally invest in your underwear, right? You don't need to go network with people. Yeah, sure, it helps, but you can read 2 or 3 books, get the gist of it. You're gonna be prepared to lose some money, but you can certainly do it at the comfort of your own home without having to network with people. Real estate as a strategy, as an investment asset, doesn't work that way. Yeah, you can certainly be to yourself and kind of do on your own, but at some point you're gonna have to network. At some point, you can certainly do it on your own, but at some point you're gonna hit a wall where you're gonna say to yourself, I need help. I need more money. I need to know more about this market. I need someone to plug me through this connection, right? It's a different investment altogether. Requires you to network, requires you to share information, requires you to one hand washes the other, right? It's a relationship sport. It's a tangible sport. There's some benefits to it. There's some cons to it, right? But it's they're relatively different assets. Now, which is better is up to you, right? I'm gonna put the link below. You can read the article that I've read that shows economists that have done studies on both assets, right? Bottom line is real estate tends to win over time, but stocks is not. The market is equity is not far behind. It's by a fraction of a point, right? So historically, these are the asset classes have been studied in majority of developed countries through their rough economies, through GDP growth and all that other good stuff, economy stuff that I hate to talk about. But I will share the article. I will share the books. I will share the brokerage company so you guys can look into that as well. But again, know yourself, know what you're good at. That's the most important thing here. And if you're gonna get anything out of this video, is that know what you're good at, know what you're not good at. And if you're not good at B, but you're good at A, partner with someone that's good at B, right? So you can invest into that asset, right? Or do anything, right? Don't say I'm not good. Don't say I don't want to have. I don't want tenants calling me in the middle of the night. Figure out a way around that, right? How can I not? Maybe a management company, but even a management company may call you in the middle of the night, right? Or in the morning. So you don't want to deal with that management company, right? So you want to know yourself so that you can find ways around it, right? Real estate has certainly a lot more benefits than stocks do, in my opinion, right? I invest in both, but if I had a gun to my head, I'll choose real estate any day of the week and twice on Sundays, just because it's powerful. It's a lot more powerful, in my opinion, than the stock market. But guys, like, subscribe, leave your comment below if you disagree, agree, keep me honest. I'm wrong. I don't necessarily care. I like to learn from others as well. But subscribe, share, and thank you for tuning in.